Welcome everybody this evening. My name is Don Kaufman and you're attending a TheoTrade presentation. Tonight we're going to be talking about find high probability intraday trading opportunities. Again, let's hop right into this here. You guys will appreciate we have a risk disclosure. We are not financial advisors nor a broker dealer. The reason I throw that up there all the time is I spent a vast amount of my career in the brokerage world, which I'll discuss here momentarily. We've also got no soliciting, no photography, no feeding the animals. We're at the zoo over here. Copyright disclaimer, this is ours. This is not yours. TheoTrade is located, our offices are in North Scottsdale, Arizona. If you ever need to get a hold of us, the real reason we throw this up here, okay? You ever need to get a hold of me or anybody here at TheoTrade after this evening, it's right there. Support@TheoTrade.com. Our support staff is phenomenal, and we again, you can call us, but emailing us, our turnaround time on emails is amazing. And again, if you need to get a hold of me or anybody at TheoTrade after this evening, it's important to me that you guys know that you've always got somebody that you can reach out to, even if it's a trade-related question. Support@TheoTrade.com. Here is a little bit about me. As I said, I spent a lot of time in the brokerage world. Quick background, I started trading in the late 90s, right out of college. I actually did come from a family of traders. People always ask, like, how do you get involved in trading? Well, you know what? I came from a family of traders. I don't mind saying that. Some very, very successful traders. At one point in time, my uncle, who has also been retired here since the mid 80s, he owned over 500 seats on exchanges around the world. That's kind of how I got interested in it and how I got involved. So I ended up in Chicago in the late 90s. About 2 years after that, I was invited to a startup called Thinkorswim. Thinkorswim is a retail brokerage firm. I was with Thinkorswim almost from the get-go. We took the company public. I actually ran education for Thinkorswim. I actually built the education. I went on then to run education for TD Ameritrade. At the time I exited TD Ameritrade, we had over 7 million clients that I was specifically responsible for the education. So I've had about a 21-year trading career. And again, I started on the professional trading market making side before kind of making the jump over to the retail brokerage world. So a little bit of background on me. I've done a couple of different CNBC tours over the years. It's Kevin O'Leary, couldn't be a nicer guy, and I really do mean that. Very, very nice guy. I'm not just saying that because he was long Apple and at the time I was short Apple, but hey, that works for me. A little bit about TheoTrade, because you're hopping in tonight, and how many people here this evening? And by the way, we're a little bit into question and answer. Even if you're watching this like recorded, how many people have actually experienced somewhat of a TheoTrade presentation in the past? Okay, and if you're watching this on a recording, you could yell at the screen. It's good for you. So a lot of people have no idea what a TheoTrade, even is. So we specialize in education for stocks, options, and futures. And one of the reasons, this is an aspect that I don't necessarily always cover, but one of the reasons we started TheoTrade is, okay, behind the rules of the brokerage world. When I was at TD Ameritrade, okay, we had finally just had it. When I say had it, okay, all the rules of FINRA and the SEC, you can't talk about this, you could do this. Okay, in 2015, we literally walked and said, that's it. We're going to launch an education firm outside of the brokerage world to get this done and to get this done right without necessarily, all the wonderful brokerage regulations, okay, around us. So everybody here at TheoTrade has a minimum of 15 years of experience. We're all founded by professional traders. A couple of us have several decades. And TheoTrade is here to help you mitigate the risks in the market while learning a skill set that can last a lifetime. Now, when I mentioned a little bit about TD Ameritrade, the reason I was mentioning that several of the instructors that we have here at TheoTrade are originally from, also TD Ameritrade and or Thinkorswim. And I'll kind of give you a little background on this. One of the things about TheoTrade, I think that's also really important. This is not a one-trick pony. What I mean by that is this is not like the Don Kaufman show. Not at all. We have Jeff Bierman. He's an analyst trader. Actually ran a hedge fund for years. We picked him up at Thinkorswim also fairly early on. If you've ever been on the Thinkorswim platform, okay, he built most of the studies for the Thinkorswim charts. He was also the chief market technician for TD Ameritrade. We have Matt Williamson's market neutral premium selling options strategist. Okay, Corey Rosenblum, senior strategist and swing trader. Corey is awesome on an intraday basis. Brandon Chapman. Brandon also worked with me at TD, running the education side of the business. Brandon's an interesting individual, and I'll tell you why. He actually helped construct most of the materials for the courses that were taught through TD Ameritrade for almost 15 years. Get this, Brandon, the course that he actually put together with me, they used to charge $24,000 for the course that Brandon put together. And obviously we pull those materials over here. We have Steve Slim Miller, 43-year veteran stocks, options, and futures trader. Steve, still living in the Chicago area. Oh, it's lovely there in March. Last but definitely not least, Tony Rago. He's actually a NASDAQ futures and just an intraday strategist. I say just, okay? He specializes specifically in NASDAQ futures trading. All right. So I just wanted to introduce you guys a little bit to the team. By the way, somebody was asking, what's TheoTrade? TheoTrade, yeah, you're going to learn that in about 2 seconds here, because it's funny. The next slide has that in that. What you will learn in this presentation. So, a few things I'm going to talk about this evening. Okay, how to generate high probability outcomes with intraday trading setups. That's one thing that all right, high probability outcomes intraday. So one of the things we're absolutely going to focus on is intraday trade. How to select the right options for intraday trading. Okay, here's one of the most critical aspects of this evening. How you can be right less than 50% of the time and still receive consistent trading results. It's the absolute critical aspect of this evening's presentation. Okay, why intraday trading does not mean you need to be glued to your screen all day. And last but not least, if you're interested in this, how to circumnavigate day trading margin restrictions with various alternatives. I'm going to cover that last, because a lot of the brokerage firms really don't love that stuff. A moment ago, I was talking about all the regulations and so forth. They don't really like when you talk about circumnavigation of some of the rules. So, guys, ready? Yeah, everybody good? Everybody hear me all right? Good. Let's get into this. Okay. TheoTrade principles. Again, I'm going to go through a tremendous amount this evening. So, okay, bear with me as we start really kind of cruising into some of the trading discussion. Okay, TheoTrade principles. So somebody a moment ago was in the chat and they were saying, what is Theo? Okay, and trade. What TheoTrade means, by the way, first of all, Theo, it's not a God complex. Okay, it means theoretical trade logic. It's actually what this initial slide happens to be. Tonight, we will focus on intraday trading setups. However, it's absolutely critical for me to distinguish effective trade performance, which is based on these three factors. Okay, one of the things that we do, all right, here at TheoTrade that I think really differentiates us is we have, well, first of all, a logical approach to all trade. First, we use trade logic. Then we use capital allocation. Then we use directional bias. One of the things I'm going to hammer into you, okay, without trade logic, you got nothing. And you're actually going to learn what that means here in just a moment. And I just want to kind of counterbalance this for a second. Trade logic. A lot of people don't even necessarily know what it means. You will in a second. But the funny thing is almost everybody I talk to, their emphasis is always right here. Okay, what's going up? What's going up? What's going to happen? Is Brexit going to happen? I don't know. What's the Fed going to do? Everything everybody's infatuated is all about directional bias. But the irony is, without good trade logic, you got nothing. And I'll let you think about this for a second. If you look at these large trading firms, okay, you think they go out there and just take $1 billion, throw it on the line and go, I hope we're right. Okay, just keep that in the back of your mind. So let's talk a little bit about trade logic. What is it? What is trade logic? Well, how you approach trades is actually vastly more important than being right or wrong in the markets. Okay, how many times, and answer this, okay, with all due respect, answer this honestly. How many times have you been right directionally but still lost money in a trade? How many people are willing to answer that like honestly? Okay, and I always throw this in here. Recall, stop is a 4-letter word. Okay, That's amusing to me. So tons of people do this consistently, but they get what I call whacked out of a trade. Whacked out of a trade is, the market does everything it was supposed to be, but it stopped you out prior to, or you selected the wrong options. I mean, I can go through 50 different reasons that you lost money in the trade. Okay. But it is brutal to see this happen time again. Somebody just said IV crush. Oh, totally. Okay. I mean, it'll kill you. Now, tonight's trade logic. The first step. And by the way, this is why we cover trade logic right here. Okay. And you're like, well, what do you mean? Why do you cover trade logic? We cover trade logic because people are right. They are right directionally. They just never saw the trade through. Okay. Because they had the wrong trade logic. First step, define your trading strategy. That's what we're talking about here. Trading strategy. Okay. Ask yourself in every trade, if I were to do this trade 100 times, what would be my outcome? Like if you just did this one trade, like I did the same thing again and again and again and again and again. I mean, everybody recognizes that once in a while you get into the marketplace and you do something that's not so smart. You can't do that. Okay. You can't do that because if you were to do that 100 times, the thing that was not so smart, okay, ultimately, what's your outcome going to be? It's going to be negative. And you guys get that. You got to do smart things, okay? You got to have a repetitive nature to you. That's what makes a trader. Many what I call directionally challenged traders can still perform if given the correct trading logic. Now, when I call you directionally challenged traders, what am I talking about? You don't necessarily have to be right. And I don't mind saying that from time to time because I'm not going to be right all the time. In fact, I'm going to show you some trade examples. Well, they're not examples, some live trades that I did a little later. And I was wrong. I was dead wrong. Okay. And it cost me, but it's okay. Because again, right, if I did that trade 100 times, my outcome would have been positive. Let's go into this. Okay. Intraday options and trade logic. In order to create a viable intraday trading strategy, we shall employ the use of options. Now, I know immediately when I say options, people go, he said the O word. Okay. Listen, relax about options. Okay. We're using options because it's a wonderful defined risk strategy for us. Okay. And you're not going to have to monitor it throughout the entire day. The translation for that, you don't have to be glued to the screen all day. And it's interesting because this is intraday trade, and yet we don't want to be glued to the screen. So if you have absolutely no options experience, do not have cause, don't be all concerned, don't get tense, okay? I'll take you through a very basic example, but then we're going to work our way into the extremes, right? And again, even though some of you guys have some experience trading options, all right? That's fine. Trust me, as we go along tonight, don't think this is going to be a basic course this evening. And for those of you that are brand new, if you're brand new and you get a little overwhelmed tonight, hey, hang on, because I want you to grab big concepts, big chunks of logic. Okay. So if you have no experience, it's not a cause for concern. It's kind of big chunks of logic. All right. Why do you want to use options intraday? First of all, just a couple of things this is why people want to trade options intraday, especially when you're newer to this business, okay? There's minimal capital exposure. Trade with as little as a few dollars at risk, okay? I'm going to show you trades. You can have 50, 60 bucks at risk. Now, when you have 50, 60 bucks at risk, immediately go, what about commissions? Okay, don't worry about commissions. We got you covered. We now have deals in place, okay, with 3 of the largest brokerage firms, TD Ameritrade, E-Trade, okay, Tasty. We have actually deals in place, again, with multiple brokerage firms, so taking care of a lot of your commission costs. So you can go out there and buy options, 50, 60 bucks, 100 bucks at risk, okay? That is literally like your max risk. Number 2 over here, okay? Offer weekly options expiration. Why do you want to use options? Okay, several products now offer 3 expirations per week. Okay, third point over here, offer viable risk reward when used properly. I'm actually going to show you that. Okay, number 4 over here, no need for stop orders. Number 5, could be traded in your retirement accounts. Number 6, avoids the mass risk, sheer magnitude, and fear produced by futures contracts. By the way, I had to throw that in there. When I first started trading in this business, Okay? I traded millions of contracts of futures. I worked again for a firm, and I traded futures against an options portfolio. And futures, that's what are the terms to use for futures? Mask, or mass, I should say. Sheer magnitude, fear. How many people in here have ever traded futures contracts? They would know that. By the way, we have a lot of Canadian clientele joining us this evening. You can't even trade futures in Canada. They have no futures in Canada. Futures can be a really scary thing to learn with. And I don't know why people oh yeah, I'm going to get involved in the trading world. I'm going to go ahead and trade a future. Trading a futures contract to begin with? Whoever came up with that ridiculous idea? Why don't you? I mean, it's a chocolate covered hand grenade. Literally, a chocolate covered hand grenade. So we'll put that aside for a second. I mean, I'm talking $50, $100, $200 at risk. Okay, you got to learn this. You got to survive, right? Futures contracts, you're not going to survive the learning curve. Trades need not be continually monitored throughout the day, and a trader can produce returns far beyond the max risk in any given position. That's one of the critical attributes, I think, of an options position. And that's why, why do you want to trade options intraday? I think those are pretty good because stock doesn't afford you a lot of these things, right? Futures, futures can give you a whole lot, but they can also take a whole lot. Now, let's go into a basic options example. Let's explain it. And I'm going to keep this one fast, simple. So we use any stock. What kind of stock do you guys want, huh? Name a stock, any stock will do. I call all stocks, stock. So that's the fictitious stock that I have come up with years ago. By the way, Boeing. Oh, Boeing. I love Boeing right now. I've been short Boeing for a long time. For any of you that do tune into some of the evening videos we do, you will know as I've been anti-Boeing for a long time. And it has come home to roost the last few trading sessions, unfortunately at the expense of grounding aircraft in a flight crash. But it has been a long time in that position. Here's a stock, and we're going to say that this stock is trading right in the neighborhood, of $100, just to make it easy. We're not going to trade the stock. Why? Because the stock itself may have considerable risk. In this particular case, we're going to go out and we're just going to trade a 100 call. Now, how long is that 100 call good for? We're going to say that 100 call is only good for the next 3 days. You're like, oh man, 3 days. You got 3 days, the 100 call. Because it's only good for the next 3 days, that option, may only be trading for 70 cents. Even on a $100 stock. Why? Listen, we're talking today about what we term what? Intraday. What does intraday mean to you? To me, it means I got in, I got out, and I did it all on the same day. So if the option only had 3 days, more power to us. So you go out and you buy a call, and the call costs you 70 cents. What does that call give you the right to do? It gives you the right to buy the stock at 100. Do you want to buy the stock at 100? No! Then why do you buy the 100 call? Just because you hope the stock goes up. And if the stock goes up, the 100 call will appreciate in value. It is literally that simple. All right. And what happens if the stock goes down? Ooh, I don't know. Let's on an intraday basis. Let's get wild here. Let's say it is something like Boeing, which has fallen out of bed, and the stock falls $20 in a day. What's the maximum risk? When it comes to option basics explained, that's the key takeaway over here. I want to know your max risk. If the stock goes down even $20, what's your max risk? All right. Listen, we went out. If we buy that option and you buy that option for 70 cents, that max risk is 70 cents. Now, options do not trade in shares. Options trade in contracts. One contract, is the equivalency of 100 shares. You're like, my, oh my, that's big. Yeah, well, 100 shares times 70 cents, still the max risk is only $70. So you go out there, you have $70 at risk. You guys tell me, what's the most you could possibly lose? Anybody? $70. That's it. Can't lose more than $70 in the trade. Now, what we're going to be covering, in a few moments is I'm going to teach you a little bit about, again, this 100 call, Okay, but I can tell you not only what the 100 call is worth right now, which is 70 cents, we're also going to figure out what if the stock goes up $2 or down $2. Right? If the stock goes up or down $2, I can tell you what is that call going to be worth? How much can I make? How much can I lose? That's the kind of stuff you need to know. But I'm telling you right now, and I just want to put you at ease. Okay? If you have $70 at risk, do you think you're capable of walking away from the screen? Because that's something that you can't do with stock. It's something that you can't do with futures contracts. And I'm letting guys know now, I trade them all. I trade stocks, options, futures. I don't care. I don't discriminate. But I can also handle, okay, a lot of risk. I've been around this business a long time. And yet I still, okay, choose to trade options, especially on an intraday basis. And that really kind of surprises people. Why would you trade options on an intraday? You can get more leverage here. You could do that there. Okay? Because the options are going to give me, okay, what I want in terms of risk reward. Let's explain a little bit deeper. Options logic example. In this example, okay, you buy an option on an intraday basis. That means you bail out, okay, prior to day's end in every case. That's one of the important concepts that's always missed. Be like, you get in, you get out, and you do it on the same day, okay? The big question is, which option do you buy? I'm going to cover that a little bit. And then you're going to find out that risk versus reward is absolutely of critical importance. Risk versus reward is critically important. Here's why, okay? It's actually something that, it's one of the first things I probably learned in this business. And they use a phrase, okay? They use a phrase in these trading firms, and they call it 100 trades later, okay? Or they use it like, the law of large outcomes. Anyway, I've always, the guy that actually worked with me used to always say, how you doing 100 trades later, kid? This is what, I've actually built a slide off that. It's called 100 trades later. In this scenario, okay, you need to create a trade setup whereby you can be right 50% of the time and still see a degree of profitability. Why? Well, you might not always be correct in your directional bias. Now, I want you to think to yourself for a second, because people get a little lost over here. If you could do 100 trades, be right half the time, and still come out ahead, does it interest you? Okay? So let's view a few live examples. But before I do the live example, okay, I want to elaborate upon this, what I just talked about a moment ago. A moment ago, we went out and we bought an option, okay, for 70 cents. We bought an option for 70 cents, okay? Let's assume that we're only going to be right 50-50, right? 50-50. Because how did we decide that we were bullish or bearish? We flipped a coin. So you're what? You're wrong, you lose 70 cents. You're right, okay? You're right. You make, for instance, 90 cents, okay? Do you see where I'm going with this? You're wrong. Let's say you lose 70 cents, okay? You're right, even if we only made 85 cents. All we're trying to do is establish in a 50-50 scenario the slightest, okay, numerical edge. And if you've never heard that term, okay, edge, it's, again, trying to have a positive outcome, okay, even in a 50-50 scenario. So let's view a few live examples because that's where I kind of want to get us headed to, right? All right, this is a QQQ example. Now, this example, I like to be very timely. This example, a screenshot, of course, is taken today. I don't want to do like, well, yes, use yesterday's example. Okay, forget about that. Here is the first example. And even if you're experienced in trading options, this one's going to take a minute for you to fully grasp. Okay, all right. I'm going to take you through some of the verbiage. Here is an underlying. Okay, the underlying is trading at what? First of all, the underlying is the Qs. What's the Qs? It's the NASDAQ, right? The underlying is trading for 176 on the button. It's actually why I selected this one because it was nice and round. We're going to go out and we're going to buy a call. Now we're going to buy, okay, and purchase the 176.50 call. Now, okay, Let's not worry about if the market's going to go up or down. Forget about it. Is the market going to go up or down? Yes. That's all I want to know. What is the call option estimated to be worth if the if the underlying moves up or down $1? Okay. One of the things that you get good at as a trader, all right, over years is you can glance at this option. Now, what am I going to pay for this option? Put it up here. Okay. Let's assume that I'm going to pay 87 cents for it. In fact, you know what? I'm going to make this even easier to see. I'm going to make it easy to see. So we're going to come up here and let's say that we're going to pay 87 cents for that option. Now, okay, if the marketplace were to move immediately $1 higher or $1 lower, can the market do that? Of course it can. It's the Qs. Look, when I took the screenshot, the market was already up $1. Right? What I wanted to show you is, had I done this early in the day, well, this would have been beautiful. Okay? But I took a screenshot later in the day. It's okay. Right? These kind of opportunities are there every single day. So what's this thing going to be worth? Well, what's a 176.50 call worth if the market moves up $1? The 176.50 call is going to be worth, okay, effectively what the 175.50 calls are worth right now. And you're like, whoa. Now there are people, okay, that are in this chat room that have probably traded for what? I don't know, 10, 15 years, and they've never really priced options this way. All you have to do, okay, at a quick glance, if you want to know what this option is going to be worth when the market moves up $1, just look at an option that's $1 deeper, what we term in the money. Now, if you're brand new to this, you're like, whoa, okay, you totally get lost. It's okay. All I'm going to do is show you what the option is worth, okay, if we move up $1, or what if we move down $1. So the option is probably going to be worth somewhere around, okay, $1.43 if we're right. What's the option going to be worth if we're wrong? Now, I'm not telling you you're going to be right or wrong yet. If we're wrong, okay, the option's probably going to only be worth, what, about 48 cents. Now, stop right there. Maybe you lose a little bit more. Maybe you make a little bit more. Depends, of course, on transaction costs, okay? But what I want you to understand right now, and we're going to actually take you through just a little bit of math in here, okay, is the risk reward in here. So I love this. I got a calculator. I got a calculator right here for you. And I don't mean to geek out on you, okay? But if you had this $1.43, okay, your option's worth $1.43, and yet you paid, okay, 87 cents for it. All right? What have you made? Basically 56 cents. So in this particular scenario, okay, initially, if we're right, what are we making? About 56 cents. Okay? And again, we'll talk about spreads, we'll talk about bid offer, we'll talk about commissions, everything. Now, okay, 56 cents if we're right. Now, what happens if we're wrong? Now, let's not worry again about being right or wrong just yet. Okay, well, we paid 87 cents for this thing. If the market moves against us, my option's probably only going to be worth about what? About 48 cents. So if we're wrong, okay, we're going to lose about 39 cents. Now, I'm going to add a little bit more to that 39 cents. Okay, we're probably going to lose closer, okay, let's say to 40, 43 cents on here. Why do I put that in there? There's bid offers, there's slippage, okay? So if we're wrong, we're going to lose as much as 43 cents, okay? Put that in a 50-50 scenario. Now I'm showing you, okay? I'm showing you a live example from today, okay, of if the market moves $1 in our favor, if the market moves $1 against us. Now again, the right option to select is critical. In this example, we're just ballparking it right now. Select the wrong option, this doesn't work, okay? If we're right, we're making 56 cents. If we're wrong, we're losing 43 cents. Now, time out for a second. This doesn't seem like spellbinding, okay? You're like, oh, yeah, I can make 56 cents or lose 43 cents. Yeah, but when you start to look at this, over 100 trades, or even over 50 trades, okay? And some people, they just can't think that far ahead, but you have to in this business, okay? Even if you're right half the time, okay? Can this provide edge for you? Anybody, okay? By the way, these are not rhetorical questions. You can jump in here anytime, right? Do you get what I'm saying? Because we're going to do it again, We're going to do it again because, again, the first time that you go through this example, right, first of all, in this trade, okay, even if the marketplace collapsed today, even if the marketplace collapsed, let me delete everything out. I'm going to hide our little calculator over here. What's the maximum risk in this trade if the marketplace totally collapsed? All right? Can't lose more than 87 cents, right? But you can't even lose 87 cents because this option has 3 days left of time. So even if the market absolutely collapsed, okay, this thing would still be worth like at least 24 cents. And if the marketplace rallied massively like it has recently, listen, this thing could be worth what? Easily $2.14, even $3. Why aren't more people using, okay, these options on an intraday basis? Because I'm telling you right now, right? Look, how much risk is that? Oh, I don't know, like 50 cents. So you got 50 cents of risk over here. How much can you possibly make on this? This option can easily go to $2 or $3, right? From 87 cents, $2 or $3. I don't know. Let's just put like plus, okay, $1.50 in here. Think about some of the risk reward that you're putting yourself into. Is that going to play out every time? Absolutely, unequivocally, no. There is edge, though, in this trade. And you look at the edge and you're like, okay, it's about, 13, 14 cents of edge in this particular trade. Yeah, but done, okay, over time, even after transaction costs, you have nothing to complain about. It's a good trade. Let's actually move on. Everybody good? Everybody good. Okay. Next, Bank of America. Why did I do a Bank of America example? Okay. First of all, Bank of America, the cost of entrance to this particular example was extraordinarily low. Now, here's an option. And again, this was the same screenshot, by the way. Bank of America, I selected this one because it was trading right at $29, right? Because the stock is right at $29. It just makes the examples easier. It makes the examples a lot easier, okay? We purchased the 28.50 call, okay? What is the call option estimated to be worth if the underlying moves up or down 50 cents? Listen, Bank of America, this thing's not exactly going to be a mover or a shaker. So can it move up or down, okay, 50 cents? Sure. What can the option be worth? Well, here's your 55 cents. What could it be worth? Your 55 cents could very rapidly be worth $1, okay? Or it could very rapidly be worth 19 cents. By the way, do we need a calculator for this one? All right, so we're not getting into higher math now. If you're right in this particular example, you're probably making upwards, okay, of about 45 cents. And if you're absolutely wrong, your 55 cents becomes worth about 19 cents. Let's just say you're losing, okay, about 35 cents. Even in a 50-50 scenario, that ain't half bad. And this is exactly why I'm stressing. Again, this is not, okay, I want to be clear about something. This is not the keys, okay, to the bus to intraday trading. This is just the beginning of you understanding what trade logic really means. Does that make sense to everybody? Like, I don't want everybody to run out and be like, this is sweet, man. Okay. It gets much better than this. You just have to have, okay, a very basic, okay, knowledge of how to achieve, all right, a little bit of edge, even when you're not necessarily going to be right. And the other thing that I continually stress over here, I was talking about some attributes, of trading intraday options. Listen, I could trade futures, I could trade stock, okay? I don't mind, but I want to trade options. And I'll tell you why I want to trade options. I want to go out and risk 55 cents. I want to risk 55 cents, okay? So I can make $1, all right? So I can make $1.50, but I only have 55 cents at risk, right? I want to put myself in continually decent intraday positions. And again, I keep reiterating intraday because I'm not holding this thing overnight. Because if I hold it overnight, this risk reward doesn't work. None of this works if you hold this position overnight. We good? Because now we're actually going to get a little crazy. Breathe, people, breathe. All right. Next example, Facebook. So starting to step things up. Now, can Facebook move a little bit more? Is it fair to say that? And I also took this shot today. I took a lot of screenshots today. So in Facebook. Now, Facebook, I think we're going to have to whip out the calculator again. Here's a Facebook option. Now, Facebook, this is a big boy product, right? When I say big boy product, this is $172, okay, underlying. And by the way, I don't care. People are like, I don't like Facebook. Neither do I. It's wonderful. Okay, that's wonderful. We agree on something. Nobody likes Facebook, except of course for a trading vehicle, right? For a trading vehicle, it absolutely is viable. Here's an option. It's $1.66. Now, I don't know about you, but I don't mind having $1.66 at risk on a $172 behemoth. This is where people they think about stop orders. They're like, yeah, so I went out and I bought a $172 product and I tried to make 30 cents off of it. This is what people do with stock. It's just insane. I worked at a brokerage firm for long enough. I've seen everything. Okay. People get involved in markets and they're scared to death of options because they don't know anything about options, but they're scared to death of options. But at the exact same time, they'll go out and they'll trade, okay, a few hundred shares of Facebook and they'll put a stop order behind the Facebook and they'll be like, yeah, I'm protected. Where you could have gone out and just bought an option that has 3 days left to expiration. By the way, you can't even really lose $1.66, just so we're clear. How can you lose $1.66? You tell me. How can you lose $1.66? You can't. Why? Because if you exited this trade today, there's 3 days left. With time left, there's still time value. So even if the market moved against you drastically, okay, your $1.66 could be worth 68 cents, even 25 cents, but it's not going to zero unless Facebook completely and utterly goes basically to zero itself. It's good. It's good, eh? It's good, eh? So if we purchase this call, okay, what's the call option estimated to be worth if the underlying moves up or down? $2.50. Why $2.50? Well, it just made it easy because look, there's a $2.50 move this way, a $2.50 move this way. This $1.66 is worth $3.25, or this $1.66 is worth 68 cents. Let us do what I call some quick and dirty math. So we're going to come over here to the trusted calculator. 325, okay, minus what? $1.66 equals $1.59. So we're going to put that right up here. So effectively speaking, if I am correct in this trade, all right, and the market moves my direction, I should be able to make right around $1.59, right? By the way, if we're wrong, just take $1.66 minus 68 cents. Here. If we're wrong, what are you going to lose? Let's just make it an even what? Even dollar. Okay? Fair enough. Is the risk reward in this trade have a degree of viability? Okay? Is the risk reward in this trade, does it have a degree of viability? Again, if we're right, we're making $1.59. If we're wrong, we're losing $1. And I'll show it to you again. I apologize for having deleted it so quickly. If we're right, we're making $1.59. Okay? If we're wrong, we're losing just about $1. And again, I could throw transaction costs. Listen, there's a lot of edge in this trade. It's one of the reasons I actually threw the Facebook trade into play. And the best part of it is, okay, even if this stock absolutely tanked, you're not losing more. Again, you're not losing more, okay, than the $1.66. And that's the part to me is, listen, that's where you in order to learn this business. Okay, you can't go out there and just be like, yeah, so I went out and I bought $172 stock. First of all, most people don't have that kind of capital. It's going to tie up ridiculous capital. But more importantly, you will never get through the learning curve. The fear, okay, of having $172 a share at risk, fear, okay, will not let you burst through the learning curve. And it's, again, of critical importance. So just remember a few of those examples because this stuff takes 2 seconds to learn, okay? But the implications, okay, are endless on it. Now, trade logic implications. In constructing an intraday trade, your options selection is imperative. Think about the implications of selecting a strategy that can provide a degree of edge in markets before we've even discussed direction of markets. Got to understand, okay, what we do here at TheoTrade, as I talked about, you're like, what does TheoTrade mean? Theoretical trade logic, okay? Trade logic is first, capital allocation is second, directional bias is third. Like literally, like what you think a market's going to do is tertiary. That's 3 down the list. Why? If you can't survive this example, Remember we were talking about the law of like 100 trades a moment ago? If you can't survive this example, that doesn't make a difference. And people use stop orders and so forth. You just can't survive that way. So think about the implications. Long live trade logic. Now, directional bias. Finally, let's approach our directional bias. After all, though, that's what people are always here for. Listen, I have been to hundreds and hundreds of different presentations, other people presenting, and every time I hop onto a presentation, everybody's like, well, I have done all kinds, by the way, that was almost my Yoda voice. I have done all kinds of research, and with my research, I know something that all of the other algorithms and everything does not. And I'm like, you got to be kidding me. In today's day and age, what? Do they not have artificial intelligence in this business? I'm pretty sure, that's going to be a little better off, than some monkey with red and green flashing arrows telling you that he has foresight, That's why this foresight's a little bit blurry. Here, I'm going to give you what I call a quant's guide to market direction, right? By the way, yes, this works with puts as well, and we're going to talk about that, Yes, you could do this with a call or put. By the way, I predominantly trade puts. I'm going to give you a quant's guide to market direction. I grew up a quant. It means a trader math geek, What I'm presenting you this evening here in terms of trader math geek, it's not just research that I've done. This is the stuff what quantitative finance is about. And people are like, well, what's quantitative finance? I'm getting nervous. Listen, quant has become like a real buzzword lately, It's all about mathematical logic, but it's based on probabilities and outcomes. I'm not telling you I'm going to be right, But I am going to tell you I'm going to try to shift the probabilities in your favor, and outcomes to be more favorable. But we just showed a moment ago, what I just showed a moment ago with risk reward, that's the beginning, of quantitative kind of finance. It's putting yourself, in viable risk outcomes time after time. Quants, however, do not typically rely on charts and studies, but rather probabilities, relationships, and seeking statistical edge in the markets. Now, the only part that we've covered thus far is right here. I'm just trying to get stat edge in the markets. We're going to talk about in a moment is probabilities and relationships. If you're not familiar with quants, not to worry, Breathe, because this is not going to be like higher end mathematics. I'm going to show this really easily. I'll be going over this throughout the presentation and how and why quantitative analysis has kind of become your best new friend. With this, markets speak volumes. Trading for you needs to be about reading into market relationships. Reading market relationships can help construct probability-based outcomes, even on an intraday basis. Speak volumes. You're like, I don't really get what you mean. Myopic trading. Are you guilty of it? I'm sorry to say this, but most traders' focus is on one product, stock, future, or otherwise. Think about this for just a second. And please, this is an interactive session. Again, even if you're listening to it on a recording, interact, people. Have you ever looked at one individual chart, on an intraday basis, and you're trying to trade that one individual chart on an intraday basis? Anybody ever done that before? Because that's what I'm talking about with being myopic. But you have to realize, if Apple is moving, can Apple move other products? Meaning that can Apple shift Google? Or if the whole market moves, if the S&P 500 moves, will the S&P 500 move Apple and Google and Facebook and everything with it? Of course. Everything today is interrelated. Myopic traders are those focusing, on one product, and they fail to see the larger probability, for example, of an impending sell-off. Don't worry, happens to us all. There's a cure for this. So myopic, it just means nearsighted, not able to see distant objects clearly. I'll just show you a perfect example. I was just picking on Apple a second ago. So here, it's Apple. This is today, by the way. This is today, and Apple was going straight up today. And by the way, I could throw every study up there under the sun. It was a MACD, it was a Fibonacci, it was a Bollinger Band. I had a Fibber Bowler on this one, a Fibber Bollinger Band, and then all of a sudden, Apple totally tanked. I mean, this is kind of a big move to the downside. You're like, oh yeah, oh I see it. It's breaking out to the upside right until it broke down. That's what I'm talking about with being myopic. One chart, okay? One chart will give you absolutely nothing. This is probability-based outcomes. Even intraday trade is based on probability-based outcomes. Via looking at select products, you can create a higher probability outcome for intraday trades. Okay, we're going to review a few products and we're going to talk about this. Now, this is the part that gets a little bit overwhelming. By the way, somebody was just saying, like, Boeing moved the Dow today. Couldn't agree more. Boeing did move the Dow. Okay, Boeing is the Dow. This is an intraday checklist. This is a lot going on this particular screen, and I'm just run you through it real quick because I want to teach you, okay, briefly, but I want you to understand a more, if you will, quantitative outcome. On an intraday basis, okay, what we do is we actually formulate, okay, a probability picture. When I say probability picture, I want to know what's the probability, okay, of this marketplace, okay, remaining higher or continuing to go higher at any given point in time. Can you discern that, okay, from looking at a handful of products? Absolutely, okay? The intraday checklist, we would look at things like bond markets, advanced decline line, volatility futures, NASDAQ futures, S&P futures, financials. What are the financials? They're right there, the XLF. The monsters of technology. This is actually a symbol we created called the monsters of tech. It's up 61, okay? The energy sector, it's the XLE. It's right here. It's also up almost 1% today. Let me show you, okay, when you get good at this. How can you possibly, okay, build a probability-based model? It's a really simple idea. Let's say that you look, okay, at 10 different things. I'm going to call them things. I don't care that this says SPX, and spiders, and the XLF, and the monsters of tech, and this and that. Oh my, I'm overwhelmed, right? You look at 10 things. 8, okay, of the 10 things, okay, are indicating that this market is all headed to the upside. It's as easy as an 80% probability. Now, that doesn't mean that news can't come out. You know, there's a big tweeter. Okay, what happened? I got tweetered. If you know the correct products to watch, though, and what to look for, you can actually create probability-based outcome and an incredibly viable intraday setup. So what we actually do on an intraday basis, and what we do every single day, okay, at TheoTrade, is we actually create this exact picture. So here you have the S&Ps up, okay? You have the Russell up big. We know that the Dow is down, which is not good, but we also know that the impact from that came from Boeing. We have the financials. They're up. Technology, very strong in the day. I mean, technology's up 1%, okay? Look at this. You have technology up 1%, right? You have the, energy sector up 1%. Okay, I can go on and on and on. You have volatility down, okay, 3%. What did you think the likely outcome for today was, right? This has, again, an extraordinarily positive outcome, if you will. Now, this can be deciphered, though, much earlier on in a trading day. I took the screenshot later in the day. All I want to get to in this, right, is people say like an intraday checklist, and they get a little bit overwhelmed with this. I don't want you to be overwhelmed. I want you to realize something, though. You know, what I talk about, this is an instant coffee and instant tea. What happens if 7 out of 10 of these quote-unquote things, okay, are pointing to a down move? All right? Well, then we would actually trade, bearish on the day. How to use bearish. Teach you how to use puts. What happens if 7 out of the 10 things are bullish on the day? Well, I'll teach you how to use calls. Okay? And by the way, there's going to be days where you come in and they're like, no trade today. Why? Because there's days you're going to walk in and be like, this is a slop fest of a day. What's a slop fest of a day? A day where you walk in and you go, you know what? Not only is there a 50-50 shot, but the markets are not even going to move today. It's not every day is going to be worth it. That's, the truth about trading. But these intraday trades, like checklists, this is what it comes down, okay, to be much more quantitative. When I say quantitative, I'm just saying build a probability-based outcome. If we told you exactly which products to look like, and again, we only give you 10 different things, all right? put a dollar sign next to it. But if I only give you 10 different things to look at, it's very easy for you to go check, 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 check. All right. We'll tell you exactly what products, though, to be your focus point. It's of, again, critical importance. The key factors to intraday success. Few things we've discussed this evening. You must employ viable trade logic as displayed with the use of options. Number two, the use of a multitude of quantitative indicators, okay, can assist you in creating a much higher probability trade setup. Okay? Is the trade logic coupled with our quantitative approach to directional bias a lot of you guys have been looking for? By the way, people are asking the right questions like, do I use this option or that option? What option do I use? Okay, here, a couple of quick examples I'm going to throw you through. All right, so I don't want to cherry pick examples. I cherry picked this first example. Okay, when I say I don't want to cherry pick examples, I mean, I don't want to show you just good examples. I want to show you the reality, okay, of trade. Here's one actually from back in January. There's the entry, there's the exit of it. This is one I paid 83 cents for and closed it at 370. That's the home run of trades. Okay. The next one in here, this is SPY, puts to open. I actually paid $1.41. I paid $1.41 for him, closed him at $1.72. It's not exactly hitting it out of the ballpark. It's a more recent example. And the reason I brought this one up, and again, I didn't want to cherry pick examples tonight. The reason I brought this one up, first of all, the trade wasn't open very long. Okay. Secondly, this is a day where the marketplace was dead. I mean, it was totally dead that day. And I just didn't substantiate a whole lot of risk in this particular case. Okay. Here's a hideous example. You ready? Here's one where I actually went out and purchased options in the spider. Here we go. Purchased options in the spider. What happened? They expired worthless. How much did I lose? 58 cents. Now I want you to think about, okay, I want you to think about just a couple of the examples that we've done. So hold on a second. Before I actually show you the next example, I just showed you 3 examples, and I'm not cherry picking at all. Here's one example. We hit it out of the park. That's all you need. Here's another example. I made 30 cents after transaction cost, whatever. It was worth the day. If you do 10 contracts, it's still $300 in the day. The last example, okay, you lose. You lost it here, 58 cents. You're like, expired, worthless, but still my heart, okay? And you're alive. And you're alive. And that's the important part, okay? And now, okay, for the best example I could possibly give you, and I want you to hold on to your seat for this one, okay? Because this one, I didn't really cherry pick this, but I was amused by this. Okay, this is actually on December 24th. Okay, how many people here that are joining us this evening took a hit on December 24th? Come on, we're in the confidence. Nobody else can read the Q&A. People took huge hits on December 24th, and I got to tell you, December 24th, it got absolutely nutty. Okay, it got nutty. Check this out. I actually bought a call option. And I bought the call option. Okay. This is about 40 minutes after the close. By the way, I'm in Arizona. We're on Mountain Standard Time at this time of the year. So this is 40 minutes after, 40 minutes after the open. So 40 minutes after the open, I bought a call option. Okay. And all of the quantitative indicators flipped over. I said, I don't care. I am out. Okay. Actually made money. I made $1.25. Now you have to recognize this was a bullish trade in one of the most bearish days, okay, in any recent history. It's actually a bullish trade in a bearish day in recent history, a day where people got absolutely annihilated, okay? And I don't mind saying I was actually on the wrong side of the trade. I still made money on the trade, but I was on the wrong side of the trade. And it's a good thing I actually looked, okay, at the markets at that point in time. But even if I didn't, the max loss sustainable, okay, it wasn't even going to be $2.99, okay? I still would have gotten out with something left in that. And that's one of the most important things, because this is a day where people took a monstrosity of a hit. This is what you need to know to successfully enter and exit intraday option strategies. First thing, people always ask me, what makes a viable intraday options candidate? So what makes a viable candidate? Okay? And I think it's a fair question. Listen, I've showed you time again. I use the spiders as a bunch of examples. Could you use the SPX? Okay? Could you just trade something like Apple? Could you trade Facebook? We actually can show you what makes the single most viable candidates. The next thing people always ask me, what options expiration do I select? You know, there's certain products now, like the spiders, that actually have expirations Monday, Wednesday, and Friday. Okay? The spiders have Monday, Wednesday, and Friday. The SPX has Monday, Wednesday, and Friday. I mean, look, when I say what options expiration do I select, you're like, it doesn't seem too bad. Yeah, well, here's the spiders. Okay? Here's the spiders. First of all, you got an expiration here. You have a 1 day, a 3 day, a 6 day, an 8 day, a 10 day, a 13 day, a 15 day, a 17 day, a 20 day. Are there enough expiration? Are there enough options on them their options? You can see I'm carrying a position here, position here, position here. We'll tell you precisely which option to use, why to use it. Okay? Again, I can't stress this enough. There's so many different variables these days. These weeklies are a wonderful product. But you have to know exactly which one to key into. Now, here's the critical one. What delta, okay, of the option that I'm buying. You have to know what we term delta. Okay? Don't worry about delta, the rate of change of the option for every dollar move in the stock. I hate definitions like that. Okay? We'll teach you what delta is, and we'll teach you exactly which delta will lead you to. By the way, delta is what we call a sliding scale. If you have 1 day, use one delta. Okay? If you have 3 days left, you have to use a different delta. It'll actually, again, depending upon how many days are left to expiration, everybody goes, should I use what they call in the money options, out of the money options, at the money options? Some people are like, it's a lot. It's a lot for me to handle here. Like, relax. We'll actually show you exactly what delta. If you have no idea what a delta is, we explain that too. Okay? But you have to know the delta of the option you should buy. Okay? By the way, there's no exercise or assignment on intraday trade. What market factors do I look at before entering into an intraday options position? That's actually going through that quantitative checklist. What's the right risk for me? Do you know what your risk is? Have you ever traded option contracts before? Do I risk $70? Do I risk, $170? You could do this, okay, with a few dollars. I mean, listen, I just showed you, trades that I had on. The biggest risk I had in any one of the actual trades that I did was $2.99. And that was done on December 24th, which is the single biggest down day in recent history. I never had more than $2.99 at risk. And I wanted to show you that because it's a pretty good thing I didn't lose the $2.99. I was actually shocked on that one, pulling that one out. I mean, would you like to learn how to create consistent intraday strategies and setups the right way? Let's discuss a little bit about criteria. Okay. One of the things that comes up is people are immediately, well, why doesn't everybody do it? You got to know the stocks to trade this on. You have to have a checklist. You got to go, how do I determine whether I'm bullish or bearish? What are expiration, the strikes, position sizing, the correct probability for the trade? How do I execute the trade? What does execute even mean? How do you send off the trade? When do I exit? What do I do in a losing position? Don't panic. And I say, fear not the intraday trade. If you know very little about options, okay? You don't know anything about options, have limited options experience, we can show you how to do this. It's going to take a few hours. What we actually do, okay, to approach trading here at TheoTrade, we create detailed recipes, okay? It's a recipe, it's a checklist for everything, including, of course, intraday trade. And I always make the analogy like, forget the bake a cake recipe today. Like, if you're going to bake a cake, obviously you're going to use a recipe, unless you've done it like 50 times. But you have to look at this as almost like a little bit of a pre-flight checklist. You go through all these different variables. Hey, would I do this? Check. Would I do this? Listen, you have to be consistent. Okay? You have to be consistent, especially on an intraday basis. Right? That's what we do here at TheoTrade is we create these checklists. We create this criteria. Okay? Trading, it all comes down, okay, to answering the what ifs. And people are like, oh, what if? I don't know. What if the stock goes up? What if the stock goes down? Okay? What strike price options do I buy? What are the day trading margin restriction? How much capital do I commit? Correct options, the delta, okay? We have the answer to all of those questions. We just build recipes, definitive criteria, and as we said, checklists for each strategy and all the different variables. When I say different variables, that's what I'm talking about, okay? The right probability, okay? Again, if the stock goes up, if we go down, can I fix a losing trade? If we sell off big, what's the correct return? That's the kind of answers, the how, the when, the why, at what price. But it's literally just the beginning of the variables, okay? How many people joining this evening have ever got themselves into a little bit of trouble in the marketplace, okay? Well, that's what I'm talking about with like different variables. When I say trouble in the marketplace, I mean, you put yourself into a position and then you're like, how the heck am I going to get out of this? What, the market's moving against me. What do I do? A little flow chart. If the market moves down, okay, this is what I do. If the market moves up, this is what I do. If the market stays flat, I have to bail out before this time, okay? What am I looking at on an intraday basis? Well, we give you all of that. The secret, it's in the sauce. Now, anybody can read about intraday setups, okay? Doing it is a different thing, okay? We have highly detailed criteria that you have to pay attention to, and it does require the utmost attention to that detail. We've spent years fine-tuning the trade setup, okay? When I say years, like putting checklists together, literally going through like, okay, you should look at X, Y, and Z before ever even considering entering to this position. That's what we do here at TheoTrade. You want the criteria to build intraday trades? This is a curriculum, okay, for a course that we have built specifically around consistent intraday strategies and setups. Here's the curriculum. We teach you how to create intraday trades, put probabilities on your side, minimizing risk, how to analyze markets, okay? So you can kind of read and anticipate. And this is creating that probability picture, okay? The option setups with detailed step-by-step entry and exit criteria, perfect for intraday traders, okay? How the market provides, okay? Predictable or what we term manipulated ranges. For those of you that have no idea what I'm talking about over here, predictable or manipulated ranges, that actually has to do, and a portion of this curriculum has to do with what we term expected move, okay? Little known insights of what drives markets, what moves markets, okay? Tools and strategies for analyzing, okay, different conditions. And this is also, it's kind of important to walk away with this one from the class, but a quick glance at the marketplace, all right? And you'll know a lot better what you're dealing with on a day-to-day basis, how to minimize your risk and maximize returns. Now, that's only portions of it, okay? Here's the curriculum continued, how to generate returns intraday, small accounts, retirement accounts, okay? Which stocks and indices are going to make the best candidates, okay? What strikes, what expirations, okay? We'll help you select all of that, when to open and what's the best time to close, okay? What market correlations to watch intraday, okay? And intraday trading doesn't necessarily mean you're glued to the screen. It's incredibly important. Again, the class, it's called Consistent Intraday Strategies and Setup. I am the trade instructor. It's a 4-hour class. It is available immediately with 24/7 access. This is a class, okay, that we have built. It is ready for you. It is ready for you what we term on demand and or on mobile, okay? So if you want to watch the entire class on your mobile device, we actually have TheoTrade mobile applications. It's on demand or mobile. It's ready. The class slide deck, which is downloadable, so you can download the entire slide deck and download it right now after signing up for the class. It includes all the entry and exit criteria, the checklist. It's the checklist. It's available for download. The class is $199. The class qualifies you for a reduced commission rate at a number of brokers. We do, okay, of course, have a little bit of a deal for you this evening. Now, I feel like every time that I present a course, okay, people immediately, I've been there, I've done that. And I realize that, like, again, almost everybody tuning in tonight, they've been through the gauntlet of paid classes and indicators and secret squirrel black boxes, and, you know, you have to buy something else, and you got to buy this, and you buy a proprietary indicator, and wait, there's more. And listen, we're a lot different at TheoTrade. We've had enough of what we term educational garbage. We've had enough of the sales pitches. We don't upsell anything ever. We intend to put an end to all of that. What we do here at TheoTrade, well, we're disrupting financial education. Everybody here at TheoTrade is professional traders, okay, with a minimum of 15 years of experience. We don't have any professional salespeople, okay? Everybody on the crew here at TheoTrade, these people are traders. Nobody ever worked in any sales capacity at any other education firm ever. In fact, most of the people that actually worked for us, okay, I kind of pulled them up like Tony Rago, pulled him up because he was actually a client of TD Ameritrade that was just really successful as an intraday trader. I was like, we got to get you teaching what you were doing. Educating you is our only goal, and we're going to demonstrate that, right? We introduced to you TotalTheo Unlimited Streaming Monthly Membership. What is this? Okay. What it basically is, we give you access to everything. Okay. Everything that we do. Okay. Everything that we're going to do. All right. And we trade with you all day, every day. It's all $99 per month. Now, allow me to explain, because immediately somebody goes, well, what else do I have to buy? Well, there's proprietary indicators and scans. Let's go through what is TotalTheo. What is it? $99 a month. What do I have to get? Okay. First of all, it includes the consistent intraday strategies and setups course. The entire course I just discussed with you is included in TotalTheo. But I realize you're going to go through a class about intraday trade. What is the best way to learn to trade? Okay. What's the best way to learn to trade? By doing it. Okay. More importantly, by doing it, by watching somebody. So we also have a live trading chat room. Well, that's 6 hours a day. It's minimum 6 hours a day. Most days we're filling the entire trading session, but it provides, okay, real trade ideas, real-time market insights and analysis. We broadcast 6 hours per day. Okay. It also includes, by the way, yes, it has this, the consistent intraday, trading strategies and setups class, but it also has access to our entire library. There's 81 trading classes. They're all available immediately. Those are all on demand. We also have new monthly classes. Okay? New monthly classes are always coming out. In addition, 59 indicators. And this is where, you go to some class and you're like, that's awesome. Okay, I love this. And they go, great. It's another $1,000 and you can buy my indicator and you can actually do what we taught in the class. We give you every indicator, okay, from day one. It's $99 a month. We email you out trade ideas. All right? We have daily coaching sessions with timely topics. This is continued education every single day. Okay? Next, the instructors directly answer your trading questions via email. Well, you can email me, support@TheoTrade.com. And you have access to TheoTrade mobile applications. I don't think most education firms have, okay, multiple applications. We have one, for Android and one for iPhone. If you have something other than that, if you have a BlackBerry, give it up. All of this is at TheoTrade.com/all. Now, I'm going to answer a couple of questions in a moment, because immediately, it's a lot to kind of absorb. Listen, again, we've had it with hey, pay $1,000 for this and $500 for this. And listen, it's $99 a month. There's over 3,000 members, and we just keep adding new instructors, adding new classes. Okay. Why? Because we can. Okay? Here, a little bit about what our members are saying. Okay. I want to read this one down the center first, because I think it's probably the most important, at least to me. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. David. Okay. Now, here's another fun one. I'll go over here. Okay. I'll go over here. I've seen or watched in the archive virtually every video that has been posted. I've learned more in the last 5 months, okay, than all other groups and seminars that I've attended in the last 10 years. Okay, you've got a great mix and diversity of teachers, which really appeals to me personally. I've been creating a trading strategy and using pieces of everyone's expertise from Paul. Okay, last but definitely not least comes from Lynn. Okay, fantastic. Okay, I thought what you did in the early 2000s, again, I've been around for a long time, and that's important that you guys know that. I thought what you did in the early 2000s were great, and I learned so much. Okay, but that just scratched the surface of what I've learned since joining TheoTrade. And the bottom line with this is, I couldn't do anything at the brokerage firm. It's why we left the brokerage firm. Okay, it's rounding out my options education, giving me an understanding of options I never had, not just the mechanics of doing a trade, but understanding, okay, the whys and wherefores of them. And it's just a couple of quick things, right? And when you look at this, and by the way, somebody already asked this question. I don't mind saying that. Can you go out and can you purchase, okay, the consistent intraday strategies and setups course? Can you do it alone? Yes. we will charge you $199. It's a one-time fee. Or, okay, for $99 a month, okay, we'll give you TotalTheo, unlimited streaming. That includes, okay, consistent intraday strategies and setups. It also includes 81 other classes, new monthly classes, okay, live trading chat room, which is, again, 6 hours a day. And I think for this one, you got to have the live. I mean, listen, everything is archived. Everything's archived. So even if you can't watch it like during the day, all right, you can tune in, check it out. Hey, did Don do any trades today? Let me recap this. We email out trade ideas. There's trading indicators and scan, daily coaching sessions, TheoTrade mobile applications. I mean, so why do you do it at $99 a month? Because we can. And we say it's as if we're giving you $100. Take the money. What do you mean giving you $100? I don't know. Would you rather pay $199? Just $99 a month? We do this because we're so sure, okay, you're not just going to be around for a month. We want you to be around for many months, okay? And it's one of the most important things to us. We're trying to create an environment here that you're not just learning for this month. Yes, like Netflix, by the way, that's kind of what we're creating. It's the Netflix for traders. Like Netflix, you can come on, you could binge watch. You want to binge watch 81 classes in a month? Go for it. I think it's probably going to be overkill, but go for it. But we're pretty sure that you're going to love us, okay? You're going to stick around for a couple of months, maybe a few years. And that's why we do this at $99 a month. Again, kind of what our members are saying. I like this one because here's the truth behind it, right? This is a Facebook review. There's a lot of information. But once you start to get through the core information that is outlined, okay, an easy to follow TheoTrade site, it all starts to make sense. For me, it has not only, okay, helped, but as a brand new trader, okay, but given me a realistic, measurable results well above my expectations. Okay, and I could read through these things all day. Obviously, there's a lot to read through. I'm going to answer a couple of questions, but I also want to bring up, okay, I want to bring up the web page before we go any further on here, and effectively where you go to, of course, to enroll for TheoTrade. So it's TheoTrade.com/all. Again, it's TheoTrade.com/all. By the way, we're here on live chat to help you. Let me answer a couple of the questions, but before I even get into the questions, and please bear with me here for 1 second. This is what TheoTrade looks like. So welcome to TheoTrade. This is the live trading chat room. It's currently off air. This is where you actually get to talk to other traders. By the way, yes, we have an actual chat room, but then there's what? This is video. It's streaming of my screen starting tomorrow morning. Okay? Starts 9:30 at the bell. Actually, it starts at 9:22 to be specific. Okay, so that's what the chat room itself looks like. In the chat room, come on, we spend, a full trading session here. Now, let's say you're brand new. You have no experience whatsoever. This is what we call start here. What's start here? It means start here. It means options 101 and 102 and 103. It's the absolute basics. As I said, you give us a couple of hours, we'll give you everything you need, okay, to get started down the right road. The next thing that everybody asks is, what are the other classes like? I don't know. What are you into? So there's 81 classes here. Option strategies, day trading classes, trend trading, hedging strategies, futures. Okay? Just because I was a little anti-futures tonight doesn't mean we don't have futures classes. We do. Technical analysis. We have it all. Let me just give you an idea with the option strategy classes alone. I want to find out, people are like, $99. For $99, you immediately have access to what? Everything. Sell premium manner, minimize risk, iron condors, okay, risk twist spreads, weekly options advantage, okay, the big short, how to collect income being short, strategy week. That's a week we just go strategy to strategy, VIX volatility spreads, okay. I know the first time you guys look at this, you're like, it's a little overwhelming. Maybe you just want to be a day trader. That's fine. We have all kinds of day trading classes. In fact, the one we talked tonight, what is it? Consistent intraday strategies and setups. This is the class. This is, you're signed up right now. You can go in here, you can click on it, okay, and you're ready to roll. That's it. You can download the entire slide deck from right there. Now, I'm going to come back to the main site. Again, it's TheoTrade.com/all. It's $99. Let me answer a few of the questions. By the way, the first question, is there a class on how to use a little bit of Thinkorswim? Yeah, I've actually got TheoTrade tutorials built into the site. All right. First question that actually come up. Is this a membership for $99 a month, okay? And can I cancel anytime? Absolutely, yes, right? If you want to enroll for this evening and you don't like us a month from now, we understand, okay? All we ask, send us an email. That's it. And again, we'll part, loving each other. And can I get out of TheoTrade? Can I stop anytime? Absolutely. It's very, very important that you guys do know that, because one of the number one questions that obviously comes up. Next question in here. I can't get approved for options because I'm totally new. Can this class help me? Absolutely. We'll actually help you. We will help you get approved for options. Even if you're absolutely unequivocally brand new to this, we can help you get approved for options at most of the major brokerage firms. Can I trade in my IRA? Yes. In fact, I do effectively trade inside of my IRA on a day-to-day basis now. I'm at the point in terms of the age, I'm maturing a little bit. So you could do this inside of your IRA. The day trading margin rule. This is one that we can actually help circumnavigate. The day trading margin rule does come into play. Okay. We will discuss that, of course, in extent in this particular course. That, again, what we term a little bit of circumnavigation, if you will, of the day trading margin restriction, which does come into play for many of you. Is everything here at TheoTrade recorded? That's another one that just came up. Absolutely. Everything that we do here at TheoTrade is recorded. And it is recorded, okay, and archived on that particular day. If there's a class, if you miss the class over there, it's okay. Relax. It's all recorded, okay? So, by the way, to circumnavigate the day trading margin rule, you don't necessarily need $25,000 in the account. We can help with that, okay? All right, continuing on over here. Somebody else said, I can't get my head wrapped around options. Am I going to be able to follow along? Yeah, so if you can't get your head wrapped around options, that's kind of what this, if you will, the start here menu happens to be, right? So I do apologize. This was the communication issue that I was having a moment ago. It started actually playing one of my classes. So you come right in here to the start here menu. So in the start here menu, we'll walk you through some of the elements of, obviously, if you're completely and utterly new to this. Next one that comes up in here. Sorry, I'm reading through a lot of questions over here. Somebody says I already get $1.25 per contract. Okay. Will they give me better than that? Yes. By the way, I cannot, okay, with the marketing agreements of the major brokerage firms, right? We can get you a very strong deal at TD Ameritrade, E-Trade. If you're not comfortable with those two brokerage firms, we can help elsewhere. If you're Canadian, which somebody just popped in, I can actually email you a little bit about where to go if you're in Canada. Like if you're going to trade intraday, you're not going to want to trade intraday. It's too expensive. Some of the major brokers will tell you where to go in Canada, which brokers are going to be the best for you. So continuing on over here. This is actually a great one. Can I access Don in the future? Yeah, support at TheoTrade.com. Can I reach any other instructors? Support at TheoTrade.com. We use a common inbox. All right, we use a common inbox. So you just go support at TheoTrade.com, put Don in the heading. Right? By the way, everybody's always shocked. They're like, you answered my email on a Sunday afternoon. Okay, it's okay. That's, I've been doing that for a long time, and I don't mind answering emails. We answer a few thousand emails now per week. Okay, we have over 3,000 clientele now here at TheoTrade, and we're adding hundreds and hundreds of clients, okay, every single month. Just keep bringing on more support, okay, more traders, and people that are very proficient in skills, okay, that we're teaching here. All right, so another one that came up over here is how much time does it take to learn intraday skills? So with intraday, okay, I would say you wanna actually watch the screen a little bit during the course, okay, of a trading session. And I think that that's okay to say, right? Like during the course of a trading session, you do want to make yourself available at least initially, okay? It doesn't have to be an entire trading day, but you will need to have some degree of availability, okay, at some point in time. How much of a trading account? Listen, the bare minimum for a trading account, $2,000, okay? $2,000. Now, with that, I want to answer a few more questions and I want to call it a night. Again, it's theotrade.com/all. It's support at theotrade.com. Here's the 800 number. And again, we're there to answer questions for you. And everybody's always looking for like, what's the catch? Okay. What's the catch to it? There's no catch. We want to help you guys in terms of trading. Is there anything, else to be, again, in terms of like, what else do we offer here? I don't know. We have different portfolios. I didn't even mention that. We have 4 different portfolios that you guys can follow along with us. Duration portfolio, fruit fly, growth account, sell premium portfolio. Here's all of the archives. Okay. Our member chat room. By the way, here's all the proprietary indicators and scans. It's all right there. TheoTrade tracker. Okay. We have a daily newsletter that comes out. Corey's Corner, which is awesome for intraday traders. It just goes on and on. The Theo Dark Report, which is multiple articles per day. Again, we're constantly adding things to the site. And I think a lot of people's initial reaction is, this is really overwhelming. And for $99 a month, okay, it's just like Netflix. Again, would you rather be overwhelmed or underwhelmed? The first time you logged on to Netflix, you're like, there's no way that I could ever watch all of this. Okay, it's good. You pick your genre of trading. Okay, you stick with it. You ask questions as needed. Okay, we'll ramp you up and get you headed in the right direction. With that, again, I want to thank everybody for coming out this evening. I know I ran over by a few minutes, but it's important that we get answers to all of your questions. By the way, somebody said the focus intraday. Now, listen, we have plenty of courses that are not geared for intraday. Okay, we have plenty of courses that are geared not for intraday, and that's really important. Okay. All right. With that, again, love that you guys were so interactive. I really hope that I tried to get to most of the questions. By the way, the app, you can play all the different archives in the app. You can, you can see everything. You can see TheoTrade on the application. Again, thank you guys very much for joining us this evening. Have a wonderful evening. Bye-bye.